Hello and welcome to Sprott Radio. I'm your host, Ed Coyne, Senior Managing Partner at Sprott Asset Management. I'm pleased today to welcome Jay Dobson, Executive Director and Equity Strategist at UBS. Jay joins us with over 35 years of equity research experience with a focus on energy. Jay, really appreciate you joining us today on Sprott Radio.
Yeah, no, thanks for having me and thanks for the invitation, Ed. I'm really happy to do this.
Well, Jay, before we dive into energy, maybe tell our listeners a bit about yourself and the work you do over at UBS.
Yeah, thanks. I've been hanging around the energy world for a little over 30 years, sell side, then a bit of a banking career, all in energy. A lot of that was in the downstream and midstream. We sort of tackled the upstream over the last 10 years or so. At UBS, I'm in the chief investment office, so we sort of manage all the mandates around the $2.7 or $3 trillion of assets under administration that is within the global UBS. And I sort of manage everything energy. So that goes all the way from the wellhead on through infrastructure and includes utilities and solar, wind, etc. Nuclear too. It's something I tell my wife I'm probably married to now, the energy space, but with energy transition and all the things we're going to talk about here this morning, there's a lot to get excited about when you're talking about energy.
To that point, energy transition, over 30 years in the space, you've got to have seen a lot of changes just in the narrative alone, as well as technology. Walk us through that a bit. What's really changed in the last 30 years? What really stands out to you on what's been different or unique?
I think the two things that really stand out to me, first is the natural gas transition. And, though natural gas is a bit of a four-letter word these days, the move from coal to natural gas here in the U.S., but even with LNG, more globally, I think has been really interesting. It's a really efficient fuel when you're using it in combined cycle gas turbines. So I think that's a really interesting one, and obviously lower carbon emissions than coal. The second big one I would have to say is the shale revolution here in the United States. I remember back early in my career, we were struggling with, is the U.S. just going to be a declining producer of oil? And, now we sit here with highest production in the world for any country. And that's going to continue to grow. And, I was just on a call this morning where, we sort of think U.S. production will grow slowly, call it 400,000 barrels a day this year, 2024. And my guess is if I had to risk that, it would be risk adjusted to the upside, not the downside. So you're still seeing growth, efficiencies, M&A activity. So I think the shale revolution has just been amazing. And so I think the two of those things, and there's many more of them, nuclear, as we'll hopefully get into. We were shutting down nuclear for a while, and now, we're going to bring the Palisades nuclear plant back from the dead and, put it back online. So there's a number of things that are really exciting. Wind, solar, I could go on, but those are some of the really interesting things, I think, over the last 30 years that when you sort of look back, you say, wow, if you don't think things are changing, you're just not paying attention.
I think sometimes people think of the energy transition as this or that. And, talk about that a little bit, because it seems like we're going to have oil and gas around probably for our lifetime. We don't see that changing. And this is really an addition to. So could you maybe expand on that a bit?
Yeah, and it is a super point. And I'd probably argue, I'm sure we're going to talk about a bunch of things here, and I may say this again on a different topic, but I would say if listeners could take like one thing away from this podcast, it would be all of the above. We're going to need every energy source, not one or two of them. And the biggest reason for that is, energy demand globally continues to grow. If you think of it most basic level, energy growth is sort of a product of population growth, urbanization, and ongoing industrialization. We see that more in the developing world than in the developed world. But, you watch in the last year just what's happened with data centers and industrial reshoring and electrification. All of these things are driving energy demand growth. So I would say we're going to need all. I even used to say it, a year or two ago when people say wind and solar are the answer. And I would say they're part of the answer. But I would say as sort of an energy guy, like, thank God for wind and solar, not because they're the answer, but because I'm not sure we could satiate the world's demand for energy with just fossil fuels. That's really how fast I expect demand growth to grow. So yeah, it's in all of the above. We're going to need natural gas. We're going to need oil. We're going to need wind, solar, nuclear. There'll be new technologies, carbon capture, hydrogen. Hopefully we'll get to talk about all of these, but it isn't all of the above scenario, particularly with where we're starting from, which is 80% of our global supply comes from fossil fuels. And though I think some people, policymakers and others, would like that to be different, the reality is, and reality is often stubborn, the reality is we're using 80% or 80% of our energy demand is being fueled by fossil fuels.
At least in the short term, a lot of people are looking at this critical material energy transition is really that move to try to be carbon neutral by 2050. First and foremost, how realistic is that? And then second, who do you think some of the potential winners will be in that movement?
I've got to be a little careful here so as not to offend any of our listeners, but with the caveat that I'm not looking at new technology. And look, new technology will emerge. But when people say, sort of net zero by 2050 with great degrees of confidence, they can't necessarily be betting on things that don't work today. So with the technology we have today, I think net zero 2050 is very, very difficult to attain, maybe even impossible. And I'm eternal optimist, Ed, as you know. So I want to believe we could do this. And I think American and even global ingenuity will move us in that direction. But I really do think where we're going to make mistakes is where we focus way too myopically on decarbonization and lose sight, hopefully only episodically, around affordability and reliability of supply. And I really encourage people to think of that like a three-legged stool. And if I rip out the reliability leg or I rip out the security and affordability leg, all of a sudden the decarbonization stool doesn't stand on one leg. So I think that's really important. You mentioned the winners. Look, I do think wind and solar is a big winner. I do think nuclear is a big winner. I would argue, and this is a little counterintuitive, maybe approaching the black swan category, but I do think some of the big oil companies are winners in this. Now, they're going to have to make that transition. But what excites me about the big oil companies is because they sort of know how the system works. They know how global energy is, derived and delivered. And at the end of the day, that's what people want. People don't want oil. They don't want gas. They don't even want nuclear. What they want is, I'm sitting here using my cell phone. They want their cell phone charged. They want the lights to come on that are over me. They want the cool air. That is what people want. And if they don't get that, they're going to be upset. So I think there's going to be a number of winners. But I think the very obvious one, wind, solar, nuclear are some of the ones that I think are big winners.
You said something earlier that I think is worth repeating, which is the word reliability, right? We see, even in the United States, we've seen rolling brownouts and so forth. What are some of the more reliable energy sources out there? I mean, wind and solar are great, but they're not 24/7. I'm sort of leading the witness here to talk about nuclear a little bit. You're seeing more and more reactors be extended and so forth. What are you seeing in that universe today in the ecosystem of nuclear from an energy standpoint?
Yeah, it's a really good question. And I would have to just step back one level, Ed, to start, because I think it's something people don't understand. But I always say, from a reliability standpoint, wherever any of your listeners are, walk over to the wall and turn on the light. The light comes on. You made a power plant somewhere very close to you do something. There was an instantaneous reaction to your demand, and supply met it. And in my opinion, that is the definition of reliability, because you don't want that. Well, you do implicitly, but not explicitly. You don't really care that it's adequate supply. You wanted the light to come on at that moment. You wanted the AC to power up at that point. So reliability, by its definition, is understanding that instantaneous matching of supply and demand. And that's really nuanced in the electricity world. And in that, recognition, you then say, well, what if I hit the light and I'm awaiting a solar and a cloud is overhead? And I know I'm talking about a low probability event, but this is the sort of thing that we have to manage coincident resources like wind and solar that, generate power when the wind blows and the sun shines. And even if we put batteries behind that, we're talking about 2 or 4 hours of battery backup, not 16 or 24, because we blow out the economics then. It really does shine a light on things, in my opinion, like natural gas fired capacity and nuclear, because these are dispatchable. If you're very, very close to a nuclear plant and you hit that light switch, you probably made that nuclear plant spin up ever so slightly to react to your demand. Same thing with natural gas, which do tend to cycle a little bit more than a nuclear plant. But yeah, I would say you're going to see in reliability. I mean, just look in Texas. Texas, the state, is encouraging the addition of new gas-fired capacity to meet what they believe is going to be a shortage of supply, even though they continue to add massive amounts of wind and solar, which again, at their most basic level are coincident resources. So yeah, I think nuclear has a great life in front of it. I mean, you saw the White House working on that, just yesterday and trying to figure out how they can help the industry develop, both from utility scale, large, all the way on down to SMRs. So I think that even the policymakers and, sort of the industries writ large are wrapping their head around, nuclear has got to be a big part of the solution.
There seems to be more and more conversations around both nuclear and even copper and some other materials out there, and technology. Those two are seeming to go hand in hand more than ever before. Can you talk a little bit about that and what we're seeing from that 24/7 demand, whether it's an AI, computing, or a data center? What are you seeing in that space? What have been some of the topics that are being talked about as it relates to tech and energy coexisting?
I mean, the evolution has been at the data center and AI level. They used to worry about latency, meaning how fast their access to the internet responded. And now they care a lot less about latency and they care about getting access to power. And why is that? AI and data center demand is rising rapidly, meaning developers are out there developing a lot of these facilities, and it's driving expectations for electricity demand growth up significantly. I mean, just to rewind to where we started, the energy transition would have been complex if global demand was going to grow, not at all or slowly. Now with AI and data center demand, forget even about industrial demand, which will continue to grow, you're seeing that demand growth accelerate. And, look, you can build a data center in probably 12 months. It probably takes you 24 to 36 months to build a power plant from the permitting stage on forward. So, what you see with these data centers, and we saw it happen with one very, very large e-retailer, they went directly to a nuclear plant in Pennsylvania and said, hey, we'll pay you a lot of money to buy 1,200 acres right next to your facility, and we'll buy power directly from you so that we can have, a data center right there. So I think the land grab, if you can, sort of use the term, is around access to power and power right now, and will be for the next, couple of years until we're better in a realm of building, hopefully some new nuclear, but, definitely some new natural gas fired capacity that can come on a little quicker and satiate some of this demand. So the demand side from AI is growing rapidly. And some people say like, yeah, you're hearing about this. Are we really seeing it? I mean, if you look at a utility in the Midwest, their commercial sales over the last 8 quarters has grown 8% quarterly.
Wow.
I mean, it's crazy. And that's all data centers. So it's showing up and it's accelerating, and you're going to see it more and more and more. I mean, you look in Virginia, Loudoun County, Virginia is the highest concentration of data centers in the United States. And right now, the local utility will say, sure, come build another data center. We can't supply you power until 2027.
At some point, Amazon is going to be buying a reactor. I don't know when that's going to happen, but I suspect you'll see that in the news in some point in our lifetime.
I completely agree. And I wouldn't be surprised if companies are going to put those in contracts saying, hey, I'm not going to guarantee I'm buying because I don't know what the cost will be, but you'll have some memorandum of understanding saying, hey, if it's in the zip code of economics and we can do it, yeah, we would expand to include SMR. I completely agree. I mean, I think people are going to stand behind that. And I get excited about SMR because I'm hoping that it really is the economics breakthrough. When we saw the last nuclear plant built in the United States down in Georgia, I got really excited. I've been a fan of nuclear for well over 20 years, and it made me physically ill to watch the plant continue to get delayed and the costs continue to rise, such that we ended up like 3 years behind schedule and twice the budget expected, though it's now online and it will likely operate for 80 years. So I think even 30 or 40 years from now, people are going to be exhaling saying like, wow, what a great decision that company made. But I still would like to get to the point where we can say it's going to cost X billion dollars and it actually costs X billion dollars.
Right.
And that's not a pipe dream, because that happens. And as an American, pains me to say this, that happens in China and India, and it doesn't happen here in the United States.
I renovated a bathroom and it didn't happen. Time or money.
Exactly.
So we probably have a long way to go on that one, but look, we can always hope. We can always hope on that. But you're right. I mean, even if the cost and time is more than people expect, if you can widen your lens and look out 50 years or 80 years, it's still going to be a cost benefit plus. What are some of the things you want to talk about that I'm not asking that maybe investors would benefit from knowing as it relates to the world of energy?
What I do like to point out is like things like methane emissions. Like, I think the oil and gas industry is full in, whole hog committed to reducing methane emissions. So pipeline leaks, accidental, gas emissions at the wellhead. Fully committed. These companies are investing in technology. The technology has actually gotten relatively inexpensive. So I would say the industry, again, I think a lot of my, very green friends, want to vilify the old oil industry. And I think what I try and tell them is like, look, these guys could be a massively positive partner if you just embrace them. Like I do think, even before whatever happens in the election, I think the Biden administration should have, an all hands on deck in the Oval Office or, some part of the White House with the entire energy industry. And that would include nuclear, that would include oil and gas, and just say, guys, we need to do this together. But so many times, particularly in, sort of the divided world we're in, we see like, well, we're going to celebrate this technology, but we're not going to celebrate this technology. And all of the above can be a carbon reducing strategy. Again, adding wind and solar, we actually reduce some other part initially. Now, again, that's not at night when the wind isn't blowing, sun isn't shining, but we are reducing carbon emissions by doing that. So having an all of the above can be reducing that. What we have to be careful of is, again, that reliability, affordability. When we go back to, things like the Russian invasion of Ukraine that took a lot of natural gas off the market very quickly, we saw the response. It wasn't that people didn't consume more. We burned a lot more wood, a lot more coal, probably more than we had in the last 10 years prior to 2022. So these volatilities and sort of life changes, really have impact. I definitely think that's something that I want to, almost reiterate. We talked about it already, but, sort of the industry's commitment to, reducing methane emissions, I think are durable. The policy that may be coming out of the White House, regardless of the election, will probably have, less consequence, hopefully still be driving towards, decarbonization, but it always have different tones to it, are probably the two bigger things that I'm hearing about. And then I guess the last thing, and I think this is unanswerable, but, people are asking like, what's the next big thing? I mean, I hear that from investors. I hear that from my boss, like, hey, energy transition, what should we be doing? And, right now I'm saying, hey, I think this existing energy we have is probably going to be the biggest benefactor. But yeah, we're going to have to look at SMRs. We're going to have to look at hydrogen. We're going to have to look at carbon capture. We're going to have to look at nuclear fusion. We're going to have to look at all these things. And some of these are further out on the horizon. But yeah, we should be working hard on all of these things. Because again, and all of the above really does mean all of the above. It's both the existing and the aspirational.
From an investor's point of view, how do you suggest investors take advantage of all these things that are going on out there? Like how are you advising the advisors at UBS, for example, on how to capture or how to participate in this? Any kind of words of wisdom on that side from an investor listening on this podcast today?
Yeah, absolutely. It's a great question. We get it a lot. I would say diversify. So many people come to me and want to say like, hey, this new whiz bang technology is it, and I want to participate. And I'm not dissuading people from that, but my point is, look at it in its totality. So make sure we own oil and gas. We own electricity. We own wind and solar. We own nuclear. There's ways to play this, and then size that in the context of a diverse portfolio. And then you can resize those. I would say commodity markets are commodity markets. As oil prices go up and we see those get to a fairly peaky level, then maybe we reduce our exposure there a little bit and we increase at other places. And then when oil prices are low or gas prices are low, we go back to that. What I do think the energy transition, when we're looking back 20 years from now, I do think we're going to say we were probably slightly more successful than we thought, but wow, was that transition volatile. And so that volatility is, I think, the opportunity for investors. Make sure you understand all of the above. And that means I don't exclude anything from that diverse portfolio, but I also am, sort of actively watching that portfolio so that all of a sudden we see big sort of gains in one part of the portfolio. We have to say, okay, that's probably a little cyclical. We're going to have answers because, I would say in almost any commodity, electricity, natural gas, oil, name it, the cure for high prices is high prices, and the cure for low prices is low prices, which means there's natural cycles in those commodities. So when all of a sudden they go up, you can understand, hey, it may take some time, but those prices won't last because it will cause people to do things. And you will see a reaction. So within the context of a diverse portfolio, I would just own every part of energy. And I would also, again, what are the companies doing when you're focused on specific companies? What are they doing in the context of their competitive advantage? I ask every CEO that I meet with, what do you think you do better? And you do get answers that are somewhat crazy, but it's so crazy that it means the CEO has really thought about it and he believes his competitive advantage or her competitive advantage is relatively obscure, and that's a blessing and a curse. But the first challenge any CEO has is understanding what their competitive advantage is.
Well, Jay, I really appreciate you taking the time today to join us on Sprott Radio. For our listeners that want to follow you, how could they reach out to you or how could they follow you and see what you're up to?
I'm James Dobson. And so if you search me at UBS, there's a lot of information that's out there. I'm on LinkedIn, probably not as active as I should be. But yeah, again, what I really love about this job now, having spent 30 plus years in it, is really helping people understand these topics, because you can't help even your policymakers, whether you're helping them at the voting booth or otherwise, make good decisions unless you understand the problems. And increasingly, all of us are challenged with understanding the problems.
Well, Jay, again, thank you, as always, for taking the time today. This was a really informative podcast. Really appreciate you sharing your wisdom.
No, thank you, Ed. I really appreciate the invitation, and just always awesome to spend a little time and share some ideas.
Awesome. Thank you, Jay. And once again, I'm your host, Ed Coyne, and thank you for listening to Sprott Radio.
This podcast is provided for information purposes only from sources believed to be reliable. However, Sprott does not warrant its completeness or accuracy. Any opinions and estimates constitute our judgment as of the date of this material and are subject to change without notice. Past performance is not indicative of future results. This communication is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Any opinions and recommendations herein do not take into account individual client circumstances, objectives, or needs, and are not intended as recommendations of particular securities, financial instruments, or strategies. You must make your own independent decisions regarding any securities, financial instruments, or strategies mentioned or related to the information herein. This communication may not be redistributed or retransmitted in whole or in part, or in any form or manner without the express written consent of Sprott. Any unauthorized use or disclosure is prohibited. Receipt and review of this information constitutes your agreement not to redistribute or retransmit the contents and information contained in this communication without first obtaining express permission from an authorized officer of Sprott.